Hi guys, good morning. It is Friday, January 19th, and I am coming to you middle of the day with an update on some of the market situation with respect to the indexes and the stocks and ETFs that we've been talking about. And I haven't had a chance to do a video in a couple of days, so I wanted to just give you all an update on how things are going with some of the opportunities we've been discussing, as well as some potentials as we go into the next couple of weeks. So first things first, I want to talk about Apple because this is one that I've been waiting to short that I was telling you last video during my live session about. What we were talking about here is this gap, right? So what I had mentioned is either if it comes up to this start of the gap and fails, or if it goes into the gap and rolls over like it did last time, as you can see here on the left, in September, it did a similar pattern where it pushed into the gap, then rolled over. So I'm looking for it to roll over. So at the first sign of a red bar, if it doesn't get above this gap line here, it's gap fill. Actually, I think really the gap fill technically is up a little bit more from here, like right around there and at the bottom of this red bar. But to be safe, I'm counting it around this 1191 area. So looking for Apple, if it does roll over, that's going to be a short opportunity for me. That's the way I'm looking at it. So that's Apple. It's still setting up for the short that I was talking about before. From an S&P 500 perspective, let's look at the SPY because that's what my calls were on. I had the opportunity a couple of days ago to actually pull in the call options that I had sold. So I have call spreads. I had call spreads that I had sold up above the 475, 77 area. And I had the opportunity to bring them back in, meaning buy them back. Honestly, I only made like $20 on them, but I was down quite a bit because I'd taken them on over here at the first week in January. I'd taken some 475 short call spreads. So sold some calls, 475, 480. And they were doing fine. And then the market kind of like just skyrocketed back up and it looked like a double top. And then I held on to them and I wasn't going to sell them unless the bars closed over this all-time high. So even though it went to 478.60 on the 12th, it didn't close there. So I held on to my position and was able to, day before yesterday, bring in some of the call spreads. So, the two call spreads, buy them back. But I only bought them back. Like I didn't lose money, but I barely made any. So maybe wasn't the best decision, but it looked like it was rolling over here. But that's good. It's a good thing about selling spreads is the fact that you don't have to have the market go in the direction that you want it to go right away. So it could, this market could just kind of sit here in a basing pattern, and I would still be able to pull in all that credit if it was a longer dated option. Because it's a January option, it was a January call spread, I went ahead and bought it back because it's too many, they're expiring today. So I kind of pushed it to the last minute. I don't like to leave them on until the end. So as you can see today, the S&P 500 is pushing back up to the all-time high. And so it's actually, if it's able to close above this bar, that's actually a bullish signal for it. So if it's able to close above that bar, I'm kind of going to stay away from the S&P 500 as a short for now. As I mentioned to you, really the Russell's the weakest market right now. But S&P 500, if it does push through this, it has a chance to make new highs actually. So we're gonna kind of pause on the S&P, and we're gonna maybe stick with some individual names or the Russell as it's still the weakest. So we'll talk about the Russell while we have a chance. So it's worked out pretty well. The shorts on the financials and on IWM in general. So this is the rut. Let me go to the IWM, which is what I have been trading short. So we talked about this range that it bounced to the 50 retracement, 50% retracement on the Fibonacci, and it was kind of, a potential breakout, but it looks like a failed breakout here. And this is again the monthly, so let me put it on the daily so you can see a little bit easier. Weekly and daily charts rather. So on the weekly, you can see it popped through that level, but it never closed on the weekly above that range, a breakout. So and it's considerably fallen since then. And we were talking about it potentially grinding all the way back down here to 166, between 166 and 170. So, I did take a short on it with some options down here at the 196 area. And I've actually gone ahead and sold, bought them back rather, bought the spreads back and sold the puts. So I had call options that I had sold as well as puts. And so I've already bought them back because really yesterday when it went down below this moving average here, it was a pretty rapid move, rapid descent, and options, again, especially when you buy options, they're time sensitive. So I actually don't have any IWM short anymore, and I could be wrong. It could continue to go down, but it's bouncing off of a weekly 200 week average, as well as it kind of went below and popped back above the 50-day average. So that's kind of what I'm looking at as maybe a potential bounce and then a rollover again. And I'll look to get back into that short. And so the next one here is going to be energy. So we talked about XLE as kind of the vehicle for trading energy short. And as you can see, it's still working really well. So that trend line is still intact, the downtrend line on the daily and the weekly chart, and it's continues to fall. So if you look at crude oil, you can kind of see where crude is as well. It's still within the it's kind of like it looks like it's like a bear flag now, and it could go up, but it could also really just flag here and then continue its descent down. And really, I was looking for it to get below this prior low. But the XLE is good as a proxy for crude oil versus a USO, for example, which is the ETF for US oil. The reason the XLE is a proxy, and I think that it's a good proxy in a weak market like this one, generally weak, meaning from an economic perspective, is because, as it's comprised of stocks. So it's like Chevron, Exxon, etc. So as the stock market is kind of relatively weak, XLE will be more weak than a USO or crude oil. Like crude oil can base here, in a bearish pattern, but it's not like falling necessarily as rapidly as XLE because it is truly just a commodity oil versus oil stocks, which is what XLE is. So it's working pretty well. So we're looking again for XLE probably to come down to this prior low here, around 78, 77 is what I would target. But I would take profits along the way because, crude is still is just reasonably, not strong, but it's not as weak is what I mean to say. So there is an opportunity for a bounce in crude. If that does happen, then XLE will follow suit a little bit. So if you have a chance, I've been in it since up here, and if you've been in it for a couple of days or even a week, it's a good opportunity to take some profits. So that's XLE, and we'll be, right now I'm still at present bearish on energy, but let's see what crude oil does and the commodities do. Right now they're weak in a general sense, the commodities. I'll show you kind of a sector ETF for commodities that I sometimes look at. And so they've been relatively weak compared to the market. And so if they continue their weakness, then that will continue to give strength to the argument for shorting something like crude. Okay, and so finally, finally on the prior opportunities that we've been talking about was TLT that we were waiting on. Let's see. So you can see it's actually rolled over ahead of where I thought it would go to. So it's even weaker. Let me use a longer time frame. Yeah. So what I was actually thinking in TLT is that it would potentially get up to here, and it might still. As long as it doesn't go below this green weekly bar, it's still a good option to consider for a bounce in the short term, while our interest rates are like weakening a little bit. So we'll see. It's not fully. It's not a great entry point right now, but I'm still considering it long, even though it is still in a bearish pattern. If it does have a higher low, if it kind of comes down and bounces again to a higher low, I'll consider buying a long option, meaning buying options on it, or buying TLT itself for a temporary bounce up to this range here before it probably rolls over again. For the short to medium term in the first quarter, right? So we're not looking at, we don't want to be in any position in the TLT as we go into the Fed meeting in March. So right now, this is just an option that I'm looking at going forward, but it's still not there because of the way that it's behaving right now, which is kind of negatively. So let's look at some opportunities, some long opportunities actually, in a market, that is technically recessionary. You're looking at healthcare usually does well. So defensive type of stocks, healthcare being one of those sectors, usually does pretty well in that environment. And you can see that it has been doing well over the weekly and over the daily time frame. And so I'll be looking for any weakness in XLV to get back into it long. So I would like to be able to buy it a little bit lower, but if not, I'll just, keep an eye out. And if it breaks this kind of pattern here, let me just show you this. It already has actually, to some extent, broken this downtrend or range. It's not really a downtrend, but it is kind of in this pattern. Let's just do it to this. It is kind of in a wedge pattern, but if it continues, it looks like the S&P is getting some strength. Excuse me. But if it continues to, if it comes down back into this range and kind of comes back down and bounces from this lower trend line, that's a good option to buy. I don't think it's going to get that low. I think it may come down halfway or come down a little bit. But it is also longer term in a bullish flag pattern. If you look at the monthly, that's a pretty big, it's a wider range, but it's a narrowing range of a flag pattern, a pennant type of pattern. So I'm going to be looking for opportunities in healthcare, and it may not be just with the XLV. It might be in individual names. So we'll have to start taking a look at some healthcare stocks to see if we can get an entry, a good entry into any of those going into this in this quarter, like within the first quarter, as we're going into somewhat of a recession based on the economic data anyway. And we'll go into that in a minute. Secondly, the US dollar, I'm just going to look at it with USD. It's been quite strong, as you can see, and I anticipate it, continuing to be strong, at least for the near term. And so right now there's no trade on it. For me, it's already extended, but look for some pullbacks in here to get long the US dollar short term. So that's my other potential opportunity in this first quarter, is the US dollar strength that it's been having, just to continue some strength into the March Fed meeting. To be honest, if we're not going to, the expectation is that we're probably not going to cut rates as aggressively as people thought. And here's why. I mean, let me just show you this this data, right? So this economic data that has kind of come out over the past several weeks. So we know, obviously, inflation is higher than expected. So that news hit, earlier in the month, with CPI being 3.4, I believe, which was higher than the expectation. That's bad news, right? Inflation's still higher than expected, than the Fed wants. So that's argument for them to keep rates where they are at least. They're definitely, I don't think they're going to, continue to raise rates, but they probably won't cut them as much based on that data. Plus, you're looking here, here's just kind of the recent economic news. Consumer sentiment is literally at a high for 3-year high at 78.8 in January, supported by confidence that inflation has turned a corner and strengthening income expectations. Yet we're seeing job cuts all the time. Macy's and a couple of other companies announced some job cuts recently. I think maybe Wayfair. There are a couple of companies this week that have announced thousands of cuts in jobs. You also saw the news today with the U.S. existing home sales hitting a 13-year low. Not great, from an economic perspective. That's kind of weakness a little bit. Retail sales in the UK fall for the most in nearly 3 years. But U.S. stocks are extending gains. Canadian retail sales are higher. Brazil and China are weak, right? So less foreign investment into China and economic activity in Brazil weak. Yet Canada and the U.S. Seem to still have a relatively rosy sentiment happening. So there's some things here. Jobless claims, I think, were not as bearish as expected, as the Fed would have expected. So they're really looking for more weakness before they can cut significantly. So that's kind of, one reason that this dollar, the dollar strength will continue, because, we're one of the only countries, one of the few countries at least in the world right now that is showing a rosy economic picture compared to some of the more struggling countries like Venezuela, like a Brazil, like a China. India, of course, is very strong as well. But what I mean to say is our currency is going to be relatively strong in that kind of an environment, which is why the USD is kind of a good trade and has been a good trade, really, for the past several months. But I haven't been in it, so I'm looking to maybe take a small position in it on any kind of weakness or any pullback, rather. And then finally, I wanted to talk a little bit about uranium and some other metals. So uranium has been pretty strong. Sorry for all of the drawings and alerts, but there has been quite a bit of strength in uranium as well the past several months. So nuclear uranium has been strong, and I think, it's not like a copper or lithium, palladium, like those commodities may go down with the commodities weakness that we're seeing. I don't know that uranium will, so I'm going to continue to look for opportunities to get long uranium if it doesn't break this trend, right? So as long as it's not going to break the uptrend, I'll consider getting back into it. This week has been weak for it. It's going into this gap right here that it made a couple of, first week of the year or so. So I might try to take a small position in it as it closes this gap right here. So if it bounces from this gap fill, I may try to go long uranium, at least with a small position. Nothing big, because some of the other metals are weak. But as long as, I know where my stop is, right? So especially if I'm buying, what I'll probably do is sell a put spread underneath this 27 area. And then if it does end up breaching there, I can just get rid of that. Versus going straight long with an option or just buying uranium outright. Buying uranium outright or selling a put spread are probably the best options versus buying a call here. Because you don't know which direction it's going in, and that's a pretty big down move this week. But I'm thinking that if it bounces from this gap fill, I'll probably take a small long position in uranium. I did want to talk about gold actually, because we had talked about GLD and going long GLD. Let's see. Let me look at gold first. So gold itself. So you can see on the daily gold the past few days has bounced a little bit. I had a position in GLD. Let me put GLD back up there. I mean, it's still bullish trend, right? In gold, it's still a bullish trend. If you look over here on the weekly, you've got this trend line, a relative trend line here. I mean, yeah, you could say that, it's kind of closing in a little bit, narrowing, or if you go from here, which is a little bit less exact, I think, it could be a more narrowing range, but it is still within an uptrend. So as long as it stays within this uptrend, there are opportunities you could potentially get long gold on pullbacks like this. So I was able to get into GLD. I've actually just sold out of it today, but I'll show you where I got in and got out 2 days ago. And I got out today, actually, not at the top, but just recently. So I'd like to stay long gold, but I had for 2 days that was a good bit of profit on some options, so I went ahead and got out of it. I like to, if I make a 40, 50, 60% gain in a day or two in options as a general rule, I like to go ahead and take that profit. I mean, there's always an opportunity to get back in it with another position. But yeah, that's a pretty big gain for a couple of days, but I'm still looking for the opportunity to go long gold on any weakness, which, today it's pulling back a little bit. So let's see. I mean, it's still actually up, but it looks like from the chart pattern, it's not like, just screaming higher. So I may look to get into it later today. Let's just look over at the 30-minute real quick. So it's already bouncing. Actually, it's already bouncing off of the 50 moving average on the 30-minute chart. So unless it comes back down here and breaks down, this is a good stop. Like for a short-term trade in GLD, you could get into it long even right now for a move over the next couple of days or weeks. But I mean, you have to kind of watch it because it is you just have to set your stops. And so for this position, if I bought it today, I would probably set my stop here at today's low, 187 area, 187.44. So that's the other long option that I have. And then I wanted to go over Bitcoin real quick because I don't have actually sold out of any big ETH, Ethereum, and I still have some Bitcoin. Of course, I'm not selling a lot of Bitcoin, but I had some altcoins that I had sold out of yesterday and day before yesterday as this weakness continues in Bitcoin. So I'm going to wait and actually get into more Bitcoin versus any altcoins. Altcoins were more speculative. They were going, and I made a decent amount of profit percentage-wise on the positions that I had, but they're more volatile and more unpredictable. And it was really just as Bitcoin was surging, those coins were going up. So it was a good opportunity to speculate with a little bit of capital. So right now you can see Bitcoin kind of spiked up on that fake news of the ETFs being approved. It came right back down, and since the actual news came out, it has gone down actually. So let's see what it does. I mean, if it pulls back below this this green bar here, this former recent low, which which is around 40,000. If it breaks that level, I mean, it could come all the way down, in the 36, 37, 38 area. By the time of the halving, which is in April. And usually after the halving, not immediately, but at some point after the halving, it tends to rebound. So I'm actually looking at miners. for the trade on that. Even though I think the ETFs have coming out have kind of hurt the miners more than Bitcoin's reversal from this top has, because it hasn't gone down that much. In reality, it's kind of a flag right now. I mean, it could still go down, but that's not 50-60% like some of these miners. So if you look at the top miners like Amara, for example, I mean, this is a weekly chart of Amara. I mean, it has been crushed. It went all the way up to 30. Granted, it kind of overextended, but it's all the way back down half of that, 15. So, I mean, I might look like, depending on how these act over the coming weeks, as long as they don't just totally break down through their pattern. I mean, it's still kind of a rounded bottom pattern, reverse head and shoulders. It looks like it's failing that neckline right now, but as long as it stays in this general range, right, doesn't get below this trend line, really I'd prefer it not to get below here, about 1350. And if it starts to bounce, I might take a small position in that in anticipation of Bitcoin rallying again closer to the halving time, right? April. So this is something to watch, actually, because Mara, Riot, MicroStrategy, all of these Bitcoin miners, and look, Riot is actually doing really badly. It's about to break that rounded bottom that I was talking about on Mara. There's Riot, Mara, there's Hut. So all these, and Hut's even worse than Riot. That's why you got to stay with the strongest in the sector. And I think that Mara is the top name. CleanSpark's also good. So those two are still holding up a little bit, right? So you watch the ones that are the strength in the sector, and it's an opportunity. I mean, this is a speculative opportunity, right? So as we get closer to the April halving of Bitcoin, depending on how Bitcoin acts, I would be looking to get into more Bitcoin, actually. I do have a longer term position in Bitcoin. So I'll probably be looking to add to it. But more than that, the miners usually in previous cycles have been weak coming into the halving and then have rallied. So it's a good opportunity for a high probability, high return play with speculative capital. Like, you don't want to put your investment capital into this. It's just very speculative capital if you have some. So Bitcoin was kind of the last piece of what I wanted to discuss today. Some opportunities we've talked about with healthcare, uranium, the US dollar, potentially TLT down the line, and XLE continued weakness in energy as well, and Apple. So Apple's actually probably the best one, the most close one to being executed. It looks like it's close to that gap. So as soon as it starts to roll over from this gap fill, if it does fill the gap or if it gets close to it, I am shorting this. This looks like probably the first trade that I'll be making of those opportunities that we talked about. And here you can just see I got an alert that crude oil is also falling. So XLE will probably continue to do pretty well in that environment. So looking at crude, it's rolling over again from this morning. So that's all I have for today. I will put out another video later on in the weekend or next week, just with a little bit of additional opportunities in actual names, like in healthcare and in the industries that we talked about. We could go into some individual stock names in healthcare, even in energy, and potentially in the financials. So in the IWM on the downside, and some potential longs as well. So as we come into closer more into the first quarter of the year, and all this economic data coming out, I'm sure that the sentiment will change towards the Fed's action based on this economic activity, and things will start to get weaker. But right now, the S&P 500 is in a bullish trend technically, as is the NASDAQ. And so we're focusing on, if we're looking at shorts, we're looking at things like the IWM or RUT, Russell 2000, energy, and potentially some commodities. So we'll get more into that next time. Thank you guys for joining me today. Look forward to give you all some more updates soon. And please hit hit the like button, subscribe if you want to follow my journey on this part-time trading. Thank you.